Now, for the elements of financial statements, our next focus, okay, we have already discussed earlier financial statements. Okay, so to come up with financial statements, we should be familiar with the elements of financial statements. At the very least, we have three major elements. Okay, the assets, liabilities, and equity. Okay, as for the assets and liabilities, they are subclassified into current or non-current. And for the equity, we have the income and expenses. Okay, so to discuss, we have first assets. The definition of an asset: it is a present economic resource owned and controlled by entity. It is a resource either tangible or intangible. Okay, meaning whether it has physical substance or not, as long as it is a present economic resource controlled by the entity, owned and controlled, it should provide potential economic benefits for that entity. Okay, according to PAS 1, okay, an asset is considered current if an entity expects to realize the asset, sell the asset, or consume it within the normal operation. Okay, unless if it's beyond the normal operation, then it's non-current. Okay, if an entity holds the asset for trading purposes, then it is current. Otherwise, it is non-current if it is for non-trading activities. If an entity expects to realize that asset within 12 months or 1 year, then it is current. Otherwise, if beyond 1 year or 12 months, it should be non-current. Okay, and specifically, if it is cash and cash equivalents, that is unrestricted as to usage. So it should be stressed that it should be unrestricted to usage. So meaning if it is restricted or if not available for use, then that cash and cash equivalent items should be part of non-current assets. Okay, and also under non-current asset, for assets that are long-term in nature, tangible, okay, properties and other intangible assets are part of your non-current asset. Okay, examples of current assets, we have cash and cash equivalents generally, then trade receivables, okay, inventories, prepayments, and trading securities. For non-current assets, we have your property, plant, and equipment, long-term receivables, okay, intangible assets, non-trading investment, and investment properties. Liability. Okay, for liabilities, okay, a liability is defined as a present obligation arising from past events, the settlement of which will require an outflow of resources embodying economic benefits. So therefore, it is the separate reflection of the asset. Okay, so under PAS 1, it is considered current if an entity expects to settle the liability within normal operations. Okay, unless if it is beyond, okay, it should be considered non-current. Okay, if an entity holds the liability for trading purposes, then it is current. Otherwise, if non-trading, then it is non-current. If an entity expects to settle the liability within 12 months, okay, or 1 year from the reporting period, then it is current. Okay, if beyond or more than 12 months or 1 year, then non-current. And also, if and only if an entity does not have any, okay, unconditional right, okay, unconditional right to defer the payment for the liability of at least 12 months, then it is current. Otherwise, it is non-current. Example of current liabilities, we have trade payables or your account payables, then accrued expenses and unearned revenues. Okay, for non-current, we have long-term debts, okay, or long-term portion of your liabilities such as bonds and notes payable, and we have the deferred taxes. Okay, deferred tax liabilities are specifically provided that it should be part of the non-current liabilities, even if the settlement of the portion of that deferred tax liabilities are within 12 months or normal operation, still it's considered part of the non-current liabilities. Okay, So for the equity or capital, okay, actually equity or capital is the residual interest in the assets of an entity after deducting all of its liabilities. Okay, the classification as to current or non-current is not applicable for this element. Okay, so your equity encompasses all changes in the assets and liabilities, primarily on the contributions coming from the owners of the business. Okay, so changes primarily from the uh, owners. Okay, it also encompasses all changes in the assets as a result of normal operations, referring to your income earned and expenses incurred. Therefore, changes, okay, associated in your statement of comprehensive income. Okay, your comprehensive income are being close to your statement of equity. Okay, an income is recognized as an increase to assets or decrease in liabilities that result in increase in equity, okay, other than contribution from owners. Okay, it encompasses all revenues from regular activities and gain from incidental activities. Examples: we have sales revenue, income from rent, royalties, down to service fees. Then expenses, an expense, okay, recognized as a decrease in asset or increase in liability with effect of decrease in equity other than distribution to owners. It encompasses all expenses incurred from regular activities and other losses coming from incidental activities of an entity. Okay, examples: we have cost of goods sold, salaries and wages, depreciation, amortization, utilities, and taxes. Okay? So that's it for the basic concepts of your elements of financial statements.